What's up, everyone? I want to show you my latest unboxing. The biggest unboxing in the world. Alright. Let's see what we have. MacBook. And that. Alright. Well, let's see what we have here. Whoa. Okay, S&P 500. $100. Let's do it. Alright, nice. And then let's look at this. I'm gonna switch video. Alright, now that I've turned the camera around, let's unveil the second part of this. Now, there's a whole bunch of money in here. So, what am I doing? Unboxing. So, this is like the S&P 500 index. And these are like all the companies in here. Now, I know what you're gonna say.
Don't we already have enough videos of what an index fund is? Why do we need another one?
Well, today I'm going to be talking about the index fund, and hopefully, for the people that don't know what it is, I can explain it. And then for everyone else that knows what an index fund is, hopefully I am showing it in a way that maybe you haven't thought about before. So I want to talk about it. This box is like the index fund. It contains 500 companies. I actually counted all these out. There are 500 coins in here. Pretty heavy actually. And what is in here? Dollar coins, quarters, pennies, dimes, nickels. There are companies of all different sizes, shapes, colors, values, stuff like that. Now, what happens when you buy an index fund like I just did? You're really buying yourself a gift. What you're doing is, these 500 companies now, the 500, if you do the S&P 500, the 500 biggest companies or some of the biggest companies in the world are now working for you to pay you out money. So the companies might include something like Visa, Starbucks, HP, Kirkland brand, which is owned by Costco. So each of these large companies, Coke, Apple, what else? Berkshire Hathaway owns Geico, stuff like that. All these big companies now are part of your ownership. You own part of all these companies. So every dollar that they make, you get a little tiny piece of. So what this means for you is, yeah, there are a ton of companies working here for you, but what you might not really think about is how many employees are working in each of these companies that are trying to make you money. So I looked up how many people are in all these companies. So according to trusty Google, there is on average 50,000 people in each of the S&P 500's companies. So they have 50,000 employees for each of these companies. Now, there are 500 of these puppies. So what that means is there are actually 25 million different employees that you are then having work for you when you buy the S&P 500 index fund. Now, I think as humans, we have a very hard time understanding scale, how big something is. So, of course, I can show you this and then tell you that for each of these, there are 50,000 employees. But what does that mean really? Well, first of all, there are a ton of coins in here. I don't know if you can tell. There are just a ton here. So imagine this, but 50,000 times this for each employee at each of these giant companies. So I'm gonna show you on this screen what that means. So as you can tell, I have put this box on a basketball court. This box is about a 5" by 5" by 3" box, 5 wide, 5 deep, 3 tall. Now, as you can see, it is a very small part of this giant basketball court. So, what I figured out was, if we have 50,000 of these boxes, we can fill the entire court all the way around from sideline to sideline, from baseline to baseline. And we can do that about 2 tall across the whole court. And they are filled, each of these boxes is filled with 500 of these coins, each coin representing an employee. So, as you can tell, we have a massive number of employees that are now working for us when we buy the S&P 500 index. So, I want to talk a little bit more about that and give you a brief history on index funds because they haven't been around forever. So, the first index fund was actually created in 1975. Jack Bogle is the creator of index funds. He founded a company called Vanguard in 1974, and in 1975 they created their first index fund. Now, people didn't always like this. They didn't like index funds, and actually the chairman of Fidelity Investments, Edward Johnson, was quoted in the 70s as saying that he, quote,
couldn't believe that the great mass of investors are going to be satisfied with receiving just average returns.
However, today, a lot of great investors believe in these index funds. Now, that's because they're diversified. Now, what's that mean exactly? That means that you get a lot of the great return and you diversify your risk. So if a company goes bankrupt, it doesn't affect you too much because you own 499 other companies. Now, that means that you might not have as great a return as if you invest in the couple great stocks that are going to shoot up throughout the year, but you also have a lot less risk doing that. Now, some great investors really believe in this. Warren Buffett, one of the best investors of all time, has been caught saying that if he were to pass away, that he would want his whole family to invest in index funds. Now, that's because it diversifies the risk and it returns a good amount. Not everyone wants to spend a lot of time and effort and have to worry about picking the right stocks. Now, another thing that's great about index funds is that you can reduce the effects of human psychology. Now, what's this mean? What I'm saying is, as you can see in this picture, the average investor has done quite poorly over time. This was produced by Forbes. It looks like the average retail investor has only gotten about 2.6% return over time, as opposed to the S&P 500, which has averaged about 7.4% over time. Humans don't make the most rational decisions. We are creatures that get very worried, and when we get worried, we do irrational things. So a lot of the time, you would think, okay, if I buy a company, I'll just hold on to it forever. But then you start seeing the valuation go down, the stock price go down, and you get a little bit worried and you think, oh, maybe I can sell it before it goes down any further and then I can just buy it back. But that doesn't turn out well usually because we try to wait too long and it starts to come back and then we wait too long to buy in. So as you can see, the average investor doesn't do a great job investing their own money in individual stocks. Now, that being said, a lot of people say,
you need a financial advisor if you're going to do well in the stock market. You don't know as much as a financial advisor. How could you ever think that you could control your money as well as a financial advisor and invest in all the right stocks and know what to do?
But to those people, I want to show them something. So a lot of you might already know this, but a lot of financial advisors charge 1 to 2%. And what this means is if you have $10,000, they charge you 1 to 2% of that for them working with you throughout the year and helping you invest well, talking to you, doing the trades for you. Now, this might not sound like a lot because they're doing some good work for you, but they typically don't return any more than anyone else. Their goal is not necessarily to beat the stock market. They just want to retain you as a client, do well, but they don't necessarily know how to invest better than the rest of us. So what I want to show here is, as you can see, I put in 40 years into a calculator to show how much money you would get if you invested $5,000 a year. Now, this shows an 8% rate of return, and after 40 years investing $5,000 a year, you get about $1.3 million. So that's a good amount, right? Well, if you have a financial advisor that charges you 1% on your money, and you do this over 40 years, I'll show you this next photo, you only get about $1 million. Now, the 1% might not seem like a lot, but compounded year over year, that makes a huge difference. That's 30% of what you of your return there. So I would like the extra $300,000. And also another way to think about it is, yeah, I just put 40 years in here, but most likely you're going to keep it with them longer than that. So if you accumulate your money over 40 years, let's say from 25 to 65, that will cost you $300,000. But at the end, you still have $1 million there that they are taking 1% of every year. So then you're paying $10,000 a year for them just to hold on to your money. They're probably not making a lot of different investments for you or anything like that. They're probably just having you stay in the same investments. So that will cost you $300,000 and then $10,000 a year from then on. So it's a very costly thing to hire a financial advisor a lot of the time. Now, some financial advisors are good, but I would suggest working with someone that does an hourly rate if you really don't feel comfortable doing this. But again, that's why I'm showing you what the index fund is. So hopefully you can be a little bit more comfortable investing in it on your own. Now, index funds, again, are great if you want to be well diversified, make good money over time, 8 to 10% generally, and that's over a long time span. And if you don't want the stress and anxiety that comes with other types of investing. Now, that could be rental properties where you have to deal with tenants and worry about the property, or buying individual stocks, or running a business. This is a pretty low stress way of making money over time. Now, this is a great time to be investing in this because if you haven't noticed, there's a virus going around that's causing a lot of people to worry. Over the next quarter, a lot of these big companies might not do that well, but over the long term, we're investing in America, we're investing throughout the whole world. These are some of the largest companies in the world, and unless you think that the world's going to explode or everyone's going to die off, they're going to do quite well over the next 20, 30, 40 years. So everything is on sale right now. The stock market's gone down about 25%, so you're getting everything 25% off, and in a year or two, we'll probably not forget about this, but we probably won't be worried about our day-to-day life. We'll just live like normal by then. So if this is something that you want to do, that you want to start investing in, I am going to say that I do have some links below to some of the things that I suggest. I have each of these apps. The first one is just M1 Finance. That's the main app that I've been using recently. Otherwise, if you want to invest through a different app, M1 Finance gives you $10 for signing up and funding your account. SoFi, I'll put them in here too. SoFi Invest, I have money with them. If you fund your portfolio with $1,000, if you use that stimulus check and you want to fund some index funds or some individual stocks or something like that, if you put $1,000 in it, you get $50 of stock. I get $50 of stock. If you want to use Webull, another account that I use, you can get 2 free stocks, I believe, through the next couple days, and then I get a couple free stocks also. If you want to share this with your friends and then you can give them your referral codes after you sign up, you can do that too. If you don't want to do it, that's fine too. I'm just letting you know that there are some good solutions out there that will give you some free money, and it takes maybe 5 to 10 minutes to set up. So if you guys like this kind of thing, let me know. Took a little while to get all this going. Sorry if that's really loud, I just realized that. But took a little while to set up this video, so if you like this, please like and subscribe, show it to a friend. I'd love to have more people watching these things, so I will see you in the next video, and I appreciate it.